What's actually happening with the Bitcoin ETF? Everybody was talking about the ETF just a few months ago. Now it's all silence. Is that actually justified? Let's have a look at the short term and the long term. Because if institutional money is getting in, that's of course nice. Now we've got two very related charts. Let's first look at the daily in and outflows from different vehicles. Now what we see at the beginning here are the outflows from the Grayscale Bitcoin Trust. So in the early days, a lot of the Grayscale Bitcoin Trust holders converted their holdings into the cheaper ETFs to save some annual fees. And we can see this direct link, right? We can see how the demand of those new ETFs are somewhat correlated with the supply that's coming from GBTC. Now, after this initial outflow from Grayscale, we now, since roughly middle of May of this year, have somewhat of an organic movement. Instead of looking at the individual flows per instrument, let's just have a look at the net flows. So initially, most days we have seen inflows, as in the ETFs scooped up real Bitcoin from the market, right? Because this is what those spot ETFs do. They have to be one-to-one backed with actual spot Bitcoin held by the custodian, in this case, mainly Coinbase. So a lot of inflows initially. Now we tend to hover around the zero line. Sometimes we are still above, but some days we also see outflows. And so let's get some clarity into this mess. Let's try to annualize the flows, at least in the last 14 days. We have seen supply absorption of 0.61%. Again, that's per year. That doesn't really sound like a huge number, does it? Let's compare this with Bitcoin's current inflation. So there's still new Bitcoin hitting the market every day through Bitcoin mining. And that number right now is at 0.85% per annum. So it's not all of the newly minted supply that gets scooped up by the ETF, but it's the majority of the supply. And once we see another halving, which will, by the way, be in 2018, if we still see the same kind of demand by the ETFs, we will have net shrinkage. As in, the amount of Bitcoin that's available will get smaller over time. But there's actually an effect that's way stronger than the Bitcoin ETF. Because we're now talking about 0.61% or 0.85%. Here's an effect that actually matters over the long term. This is the adoption of Bitcoin as a long-term investment. We're seeing two things in this chart. First of all, the long-term Bitcoin price, that's in black. But we also see the percent of Bitcoin, so that's the scale on the left, the percent of Bitcoin that hasn't moved for at least 5 years. And this tends to creep up over time. So in the last 6 years, this moved from roughly 20% to currently 30%. So a 10 percentage point change over the course of 6 years, that's 1.66% per annum. Almost 3 times of what gets bought up through the ETF. Now, why do I make the cutoff at 5 years? That's because once we make the cutoff at 3 years, we do see how people are riding the wave, right? We don't see just a constant increase. We do see how those kind of wallets tend to sell during very elevated prices. So the investors that don't sell, no matter the state of the current cycle, they are the ones that support Bitcoin over the very long term. And they are the ones that create those higher highs and higher lows over time. The main problem with crypto YouTube is conflict of interest. Too many YouTubers shill garbage, promote garbage, and fill up their pockets in the background. Not this channel. Instead, there's simply the offer where I share my skills, my perspectives to you, and where I also share direct access to me, where you can ask me any questions. Feel free to check it out. The premium membership link is down below. Now, the issue is that a lot of Bitcoin supply isn't liquid, right? It's held by centralized exchanges, it's held by diamond hands. So it's just a few short-term speculators that can move the Bitcoin price a lot. And that's why we see those massive crashes every now and then, right? More than 80% over here in 2018, or here in 2021, 2022, a drop of 77%. And we tend to see those crashes regularly throughout Bitcoin's history. And so it makes sense to still try to ride the wave somewhat if you don't want to get crushed by 80% during a bear market. And what we can do is we can look at the exact opposite. So we don't look at the long-term holders that never sell. We look at the short-term holders that tend to get excited when prices rise and that tend to exit the market when prices don't rise that fast anymore. So what we see now over here is the percent of Bitcoin that's held in wallets that have it at least active in the last 6 months. So no wallet in here is holding Bitcoin for longer than 6 months. And yes, this is declining over time because people aren't using Bitcoin necessarily for speculation that much anymore. So that's the flip side of this, right? Bitcoin is used more and more as an investment vehicle, not that much for speculation. But we still do see our peaks and our valleys. And we tend to peak out in the percent of Bitcoin held by short-term holders when there's an end of a bull market. And when this tends to go down, right, when the short-term holders aren't interested anymore, that's when Bitcoin tends to decline as well. And just have a look at this, right? For this kind of investor, they only moved maybe 25 percentage points of Bitcoin, but the Bitcoin price itself moved down by more than 80%. And so whenever this tends to recover, whenever this tends to go up, we might consider buying, right? Then the short-term holders come back in. Same over here, right? A lot of short-term holders went in once Bitcoin hit a new all-time high. And so we had declined interest by the short-term holders for quite a while, and then a turnaround in January of this year. That's when Bitcoin made its move from 40K all the way to 73K. Now let's zoom into the recent price action. We see the short-term holders tend to rather exit again, which is not good for the price. It's not a perfect indicator, but I still think it's nice to look at, right? The Bitcoin price tends to rally when a lot of short-term speculation enters the market, and it is worth trying to time the market because of those massive crashes. But if you're not interested in overcomplicating your investment decisions, you can simply just buy and hold, right? The long-term adoption as an investment vehicle is not stopping. It continues to grow. And that's again what causes this nice exponential rise of Bitcoin. This is the price development on a logarithmic scale, and so it doesn't look that great. But on a linear scale, in US dollars, those higher highs and higher lows do matter. And it's all caused by the diamond hands. They are way more important than the people that buy through the ETF. Yes, having this demand is useful, and having this combined with the halving is even more useful because this gives us an additional supply shock of 1.4% roughly. But all of this only works if there's still enough people that dollar cost average into the asset. And so one way to write this is to simply buy more when there's less speculation, when the price tends to be low, and to buy less or to even sell when there is more speculation, when the market is heated. Currently, the market tends to rather cool off. And so let's see where things are going from here. I'm personally rather risk off. I know this is an unpopular opinion, but just because US dollar prices aren't going up doesn't mean that we can't make money, right? We can still short cryptocurrencies. We can still bet on falling cryptocurrency prices. And there's plenty of opportunity there because most altcoins tend to underperform Bitcoin and Ethereum most of the time. If you got something out of this video, feel free to subscribe in case it's your first time here. Feel free to also give this a like. It helps the channel grow. In case you've got Telegram, then you're more than welcome to join us. The link is down below. Looking very much forward to chatting with you.